we know that I don't know much about treasury and risk management, but as I have the responsibility of introducing the course, you can learn many things about and everything about the treasury and risk management from our resource person, Mr. Nishant, and other resource persons. But we know, basically, we know we also have a treasury, that is our pocket. And the institution has a treasury, that is all the portfolio they have. So if we don't, the same way that if we don't manage our pocket well, doesn't matter. No matter how much we earn, finally we end up with this lot of financial problems. The same way, the strength of financial institutions or any other institutions depends on how they manage the treasury. Therefore, the treasury managers are highly recognized, well-paid individuals in any organization. And why? Because now we have to understand how to manage treasury. There are already ways of managing our treasury. In that, we have to understand, basically, I look at the brochure, the financial markets, financial instruments, how the markets operate, and the current situation, future emerging trends, and also the related benefits as well as the risk. Then if a person is not conversant sufficiently to understand and also develop these skills, it needs competency, knowledge, experience, and also mainly the patience, I think. I remember one story where during the Asian financial crisis, two dealers in the Korean financial institution, one of the Korean financial institutions, committed suicide in the office itself, because they were so excited about the emerging benefits of investing. Then they started doing it, and finally they end up losing everything that they had. So they had no option than to commit suicide. That's where you have to be very patient, and also you have to develop your senses. Most important thing, our resource person, Mr. Nishant, will agree with me. The most important thing is to sense the market, the current trends, future emerging opportunities, and also the risks, and patiently analyze and take decisions accordingly. So in this program, our resource persons led by our Mr. Nishant is going to expose you to all areas of treasury and risk management. And the details of the course will be explained by Mr. Nishant, because I am not that much conversant. All the details, the coverage and the assessment and all those things will be explained by him. Let me introduce him first. Mr. Nishant is not a new person to the IBSL. He's a well-known, well-recognized resource person, senior resource persons associated with all the programs in the IBSL for a long period. He is one of my very close friends and colleagues in the central bank for, now I was there for 30 years, and our association is around 20 years, I think. I also have learned a lot of things from him, especially when it comes to delivering lectures on these financial markets and all those things. I also have learned from him. And with that, let me introduce him. He has academic qualifications. That is, he has MSc Financial Economics, University of Birmingham, UK, and also BSc degree in Statistics, University of Sri Jayawardenepura, and also postgraduate diploma in Computer Science. So he is a multi-disciplined person. And also, for a long period, he was the main dealer of the central bank in the dealing room. Then, if you can manage the central bank treasury, then you can understand his exposure and also the experience. And also, he has many training programs he has followed to his credit. And also, he has been a lecturer. And now, he is working in the capacity of a deputy director in the risk management department of central bank. I don't want to go to the details, and there are so many. If I want to account with this, add to his account, with that, over time, irrespective of the qualifications and all other things that I am going to explain, I am explaining here, you will understand in the course of the program how conversant he is, how competent he is. So that's what matters mostly. And before finalizing this, let me talk only a little bit about our experience about conducting these programs. Because even though we have seen high level of enthusiasm among participants at the beginning, gradually they tend to become a little bit lethargic. And finally, results become a little bit unsatisfactory because now you know that this is a very professional course, so we can't send a person just with a certificate without having the required exposure and the competency to handle this treasury management work in a bank. If our participants go there without that competency, only with the certificate, finally it backfires on us as the quality of the program. Therefore, we have ensured that the quality is there with respect to the coverage and in-depth analysis, and we are getting the services of very competent resource persons with experience and knowledge. Therefore, it is your responsibility to follow the course with the same enthusiasm that you have at the very beginning until the end. And especially, let yourself be a headache to these resource persons and asking questions and clarifications all the time. Then you can learn and also take something back home with the certificate. With that, let me again invite our resource person, Mr. Nisanta, and also he also will introduce other resource persons because I am not conversant about them that much. So I know Mr. Nisanta, that's why I explain all these things. Then let me invite, while wishing you good luck and also inviting you to be very active in this course, let me hand over the program to Mr. Nishanta. Sir, it's over to you.
Thank you, DG, for the very kind introduction. So, DG, when he introduced about myself, he said, I'm from central bank, from the central bank perspective. So I know most of the things from the central bank perspective, from the regulative perspective. But on the other hand, you work for a commercial, most probably would be for a commercial bank. Things happening in commercial banks may be a bit different from the central bank side. So you can get a lot from Perry because he has 27 years experience in commercial bank and especially in the treasury related side, including ALM and treasury management. So indeed, that's the core of this course. But other topics that we are going to cover, other peripheral areas that you need knowledge to manage the treasury. So apart from two of us, towards the end of the course, there's a special or separate section called regulations and compliance. For that also, we will bring out another central banker, Mr. Sarjun from Bank Supervision Department. He will conduct regulation part. That's a brief introduction about our panel. But in between that, time to time, in any case, if one of us cannot take the class, there may be other resource persons as well. But don't worry, they are also very well qualified and with experience. Only we take them into or ask them to take the classes if necessary. So with that, I don't think now I do want to do another introduction about myself because DG did a good introduction. So I have prepared a small presentation about the course. So can you all see the presentation?
Yeah, Nishant, can see.
Yeah. So the topic, as you know, Diploma in Treasury and Risk Management. So we'll discuss about how treasury, especially in a financial institution or mostly about in a commercial bank, how we manage treasury and related risk. So what is our objective? So whoever who participate in this course, we want to make them aware about the nature of this treasury, what is the composition in that, and what are the instruments that we use, domestic market and the international market. That's one thing. So we will discuss later why did you decide to follow this course, whatever your objective. So don't think only locally. I think this is a very good opportunity. You can go overseas as well if you learn all these things properly. So therefore, we are going to discuss a lot of on international markets as well. So the instruments traded in domestic market as well as financial markets. So you will get an overview or the awareness through this and treasury operations and related risk management activities. And most importantly, our audience, not necessarily related to treasury people, because yes, there's a requirement by the central bank to work in a treasury. In a commercial bank, you need to have some sort of qualification. This course is one of the qualifications accepted by the central bank. Not only that, so treasury work with other divisions or departments in a bank. So treasury may be audited by audit department. So auditors, they should know what is the operation of a treasury, what does the bank expect from treasury, what is their duty to ask the correct question, challenge them. So you should have to have a good knowledge on treasury to audit them. Risk management department, or there may be a risk management department or a separate back office. They should know what are the products, what are the risks that can arise from these transactions, things like that. So you need knowledge to support treasury operations or even to challenge treasury operations. Not only that, even if you work in a branch, knowing that what is happening at the treasury level or the overall level of the bank, it would be helpful for you to conduct your day-to-day operations. Knowing about financial instruments, how to price them, how do you trade them, and basic knowledge on the products and things, it will helpful for you to carry out your day-to-day activities. So don't think this knowledge is required only for the treasury people. Even outside, you may need this. And in your career development, I have experience. So in banks, you may get elevated at higher levels, but it may not be necessarily through the same line. One point, you may have to oversee the activities of treasury at the very senior level. So then in that case, you should know what is happening there. We have experienced some senior officers from banks have attended to this course just to get that, because he is supervising now, or he or she is supervising the treasury now, but with no or little experience. So accumulating that knowledge at very early stages, I think it will be helpful for you. So then let's move to what are the key areas that we are going to cover. As I mentioned, the core is treasury management function and asset liability management part, because that's the main role of a treasury. But to do that, we should know about financial markets, what are the instruments traded in financial markets, how do they price, how do we trade, what are the jargons related, or what are the terminologies that we use in financial markets. So we will try to cover all these things in the first module, financial markets. Then we'll move into the treasury management functions. What are the activities that treasury is handling? Then in the module 3, we'll discuss about financial derivatives because we need financial derivatives in our asset liability management and risk management activities. With the basic knowledge on the market instruments and financial derivatives, then we can move into the asset liability management side. Then related risk management, what are the risks? How do we use all the knowledge that we gather through the financial markets and the financial derivative markets? How do we use those knowledge to manage our risk? And ultimately, banks definitely they have to comply with regulations and compliance or regulations. So in the last module, we'll discuss about what are the regulations especially applicable for treasury, not for the whole bank. Especially what are the regulations applicable for treasury, we'll discuss in the last module. And the next important thing for you, I think, how are we going to assess you at the end of the course? So you might see I just changed it slightly for the final exam. Maybe towards the end of this year, depending on the situation, how we can move ahead with the current pandemic situation. Hopefully, we will be able to move with the schedule. At the end of the course, there will be a examination about 3 hours. So that will carry 70% of your final marks. Then there will be an assignment with 20%, and we are planning to have a group sessions or give a project and ask you to do a presentation that will carry 10%. However, that is our plan, but you know, with this pandemic situation, we may have to change this. In worst case, this may turn into 2 assignments. That can happen, but still remember, we'll keep that fixed. For the last final exam, only 70%, and whatever the assignments or the assignment plus project, you will get 70% marks. So that is about the examination, and then the grading. That's what you need. This is not only for this course. This is the general criteria used by IBSL for grading. If you get 81% or above, you will get a distinction, and in between 65 to 80%, you get a merit, and 51% to 64% pass, 50% and below fail. So this is the criteria, but I would like to say something here. At the introduction, DG mentioned, Mr. Karunatilaka mentioned that treasury is a very important place in any organization, even in our day-to-day life. As he mentioned, our financial, we have to manage properly. So even though here you have a chance to do mistakes about 50%, in a treasury you can't do that. 50% mistakes means that's the end. So you can't do that. So I prefer you to have more than 80% correction, because you need that accuracy or more than that in reality to work in a treasury. You can't do mistakes, you will come to know what is the value of 0 if you omit a 0. Even a 4th, 5th or 6th decimal place, what would be the impact that you get? So you need accuracy and accuracy. So therefore, target 81% and above. Don't target this just 50%. You will end up somewhere 25 or 20. Target 81%. At least you will end up in the pass band. So that is my advice here. So with that, I'll show you grading, a summary of grading that we got for the 2019 batch. 2020 batch, still we couldn't conduct the examination due to this pandemic situation. So therefore, we don't have the results. This is how it was in 2019. You can see it's fairly distributed. If you know about normal distribution or things like that, you can see this is very fair. So DG mentioned this is the pass rate is not that that good. Yes, true. We would like to see a skewed pattern. So most of the people fall into this area. We would like to see that. As resource persons, we will give our best. But meantime, you are not school children. You all are adults. You have your objectives. So you have to play a role. So keep it in mind. Put your best effort to get best out of us. As DG mentioned and as Perry mentioned, challenge us, ask questions. That's what I want. I would like if you ask questions and have an interactive session. What we have experienced, especially last year with this online classes, we can't see you. We both, Perry and myself, we were in a kind of difficult situation to understand whether you have understood or not. If it was a physical class, we can see your faces and what you have written, how have you done the calculations and things. We can get to know about yourself, whether you have understood it or not. But in online classes, we have that difficulty. But to overcome that, I'll try to post questions and get your answers online. We'll try to circumvent that situation, but better whenever you have a question, ask questions. Whenever we ask questions, try to respond. So this is about it. In my style, if I did a physical class, most of the time I will ask whether you have any questions. I'll ask you any questions. So take that opportunity, ask your questions. Then the second thing, Q&A, I will ask a lot of questions. Then respond. Again, in the about asking questions by yourself. Don't worry. There's no anything or something called silly questions. Don't worry about others, whether they have understood or not, whether they know this. I know most of the 70%, at least 70%, they don't know. They have the same question, but nobody asks. That's what happened. You don't want to get yourself exposed and you feel shy. Others will think this is a stupid question or something like that. don't think in that line. Whatever the question you have, ask it. Then we can clarify. And as Perry mentioned, it may it may not something included in our course contents, or we may not have the intention to discuss that, but you will get to know something. And not only that, sometimes even we may feel this is a very small thing, need not to discuss. But if you ask that question, what you have, then we, as resource persons, we will realize this is something that we have to discuss, and we can discuss that. On the giving answers to questions, that is also very important. Whenever I ask the question, you may think, okay, answer is this. You have the particular answer. You think it's correct. If you don't tell me that answer, I don't know what is your answer. Later I may tell this is the answer. Then you will realize, oh, this is wrong. Whatever the answer that you thought, it is wrong. Don't wait until that time. You give your answer. Then I know, most probably, I know the reasons behind that. Why did you choose that answer, or why did you give that answer? What are the mistakes that you have done? So I can explain that. So, you know, learning by doing mistakes is the best way. You do a mistake, you learn it, you will remember it forever. You might have realized it in your day-to-day life as well. So don't worry. Whenever I'll ask a question, try to give answer. Then we'll discuss those all answers and enhance our knowledge. So as I mentioned, we are here to support you, direct you, give whatever things that we know, but it's not the only resource available for you. Nowadays, there are a lot of resources. So we have a list of references. This is one of the references. This is about fixed income securities. So this is how you can contribute to fill the gap. About grading, you saw this. Is it for the assessment?
Yeah.
Grading, as I explained, so this is the grading criteria: 81 and above distinction is 65 to 80 merit, 51 to 64 pass, 50% and below fail. As I explain, you don't target just 50, target 100 or 81 above. You will fall somewhere near there. So this is the one you wanted to see. The results of 2019 summary. So you can see about 13 got 60, around 60 to 70, and so it's fairly distributed. So don't worry, if you work hard, you can achieve more than this. And this is the questions that I discuss. So I'll ask most of the time any questions. Then it's the opportunity for you to ask questions. But as I mentioned, don't wait. Whenever you have a question, ask it. Then it will be easy for us to discuss it at that point and without going back. And whenever I ask questions, please answer. Then I can get knowledge or idea about whether you have understood or not, or what are the mistakes that you do, common mistakes. Then we can correct those at that point. As I mentioned, I think you agree with me. Doing mistakes and learning would be the best way. Don't wait until the exam to do the mistake. Then it's too late. Do it now during the class. Then learn, okay, this is the mistake that I have done. How should I correct it? So with that mind only, you move into the exam. Then you won't do that mistake. Oh, okay. One thing, since it came into my mind. So in this course, you are allowed to use calculators, non-programmable calculators. So whatever the calculator you are going to use, be familiar with the calculator. You know, different calculators work in different manner. It doesn't mean the answer is wrong, but the way that you have to key the numbers and operators differ from one calculator to another. So practice your calculator, and then you don't make mistakes. And in the exam, for the final answer, you may get only a very small mark, maybe 1 mark or 2. In a question, of a 20-mark question, for the final answer, you won't get 10 marks. But the equations, methodology, and things like that, or the interpretation of the answer, because nowadays we can use calculators, or the calculators, computers, we have systems to do the calculations. But you should know what is behind that calculation. Whatever the outcome throws out from the system, you should be able to identify whether this output is correct or not. If something has gone wrong, because if you have input a wrong thing, the system will give you a output, garbage in, garbage out. If you don't realize that some of the inputs are incorrect, then the output will be incorrect. Even at that time, when you look at the output, you should be able to realize something has happened wrong and go back and check it. So therefore, we expect that knowledge from you, but it doesn't mean that you don't want to know how, to perform the calculations. This course has some calculations compared to some other courses, but not only calculations. How do you interpret that those results and things are very important. So then we'll jump back into the other resources that you have. We will distribute among your in the group what are the recommended textbooks, but it doesn't mean that you have to read each and every book. So whatever I can find in the library of IBSL and related to this course, I have listed it in that book. Even out of that list, if you find another book which you think it is good, you can prefer, because thing is, so in our speaking, we have different styles. Same thing in our writing. Different people use different writing styles. So if you take a book, the same concept might have explained in 2 different books in 2 different styles and different ways. While you read the book, you may prefer one style over the other. So whatever the style that I prefer, it may not be your preference. So if the book covers the content that we want to know and it's some reliable source, I don't mind referring that. If you think that style or that book is easy to understand or something, whatever the criteria that you want to assess. But these are very famous books, very widely used and reliable books in this area, what I'm going to show. So fixed income market, the handbook of fixed income securities by Frank J. Frank is the most widely used one. This affects global code. Probably we'll discuss this, whatever the relevant area. This is something that Perry mentioned. The ACI. This is their origin from ACI. Now it's from the Swiss Bank for International Settlement in Switzerland. That covers some ethical things in the market. How should you behave in the market? Treasury management. So all these are these books are available in the library. If you think, or better, if you can find these books and refer, you will get to know more things than what we discuss in the class. Or even if you cannot understand something, you can read the book. Still, it's not possible. Anytime you can ask questions. However, I recommend these books for you to refer. Not only that, this is the most widely used resource now. Internet, World Wide Web. You can use whatever the resources available online, but try to refer only the recognized or reliable sources like Investopedia, Wikipedia, and things like that. So that's about references and other sources. Not only that, DG mentioned at the introduction, it's not only about the theory. We have to develop sensors. If you are to be in the market and treasury, you have to have sensors all over the market. What's happening in the market, what others are thinking about it, what are the imminent risks, or it may be opportunity for you. So things like that. So you need to be in the market, read newspapers. See, these are some of the paper articles published in local newspapers, not only local newspapers. You may have to better read global newspapers, so refer global news agencies, because we are living in a globalized environment. Whatever happening in some other country, maybe US or maybe Europe, maybe Japan, we will have some impact on our market. So we have to monitor all those things. So you might see, I don't know how many of you can or you have seen this sort of paper articles. So we will discuss all these words: bonds, yields, nosedive, monetary policy. You can see option, bill option, mixed results. There may be different jargons. We interpret the same thing in using different words. Commodity prices, what would happen, what's happening, why these things happening. So you have to have some sense about the market. Develop that culture. Now, if you are not already in the treasury, don't wait that until you move into the treasury. Make it a habit to read these things and interpret these and assess what would be the impact on us as a country, as a economy, as a bank. Not only that, as an individual, you will learn a lot how we can apply these things individually as well. So some of the announcements made by central bank, this is you can see Sri Lankan development bonds. So we will discuss what are those things and how do we handle these things. And paper articles or blogs published by other eminent persons in the country. So you may better go through these, refer these. You may come up with questions about these things. You might read a paper article. There may be something that you cannot understand. You can bring it to the class and ask the question. So why this has happened? Why this has or this action has taken by the central bank or the other policy measures, or what would be the repercussions, things like that. You can ask questions, but again, I have some limitations when I'm answering questions, but I'll try to answer up to the level that I can provide answers for that's some sort of question. And this is this is a conversation or a chat in one of the social media. Why the reason I put it here, for the 2019 batch, we form a WhatsApp group. So even through that, students ask questions. They share like paper articles, whatever things they thought that better to share among the group. Not some jokes or some other political things like that, but relevant to this course. We share those. They ask questions, I answer those questions. That was there. But this happened. This particular conversation happened just maybe week before the exam. If the exam is scheduled to be held next Sunday, maybe Monday or Tuesday, I got this message. So what tutes cover fixed income? So you can see in which tute which handout you cover fixed income. It should be fixed income. No, it's not in derivatives or somewhere. So that student hasn't had that. So ultimately what he said, he has missed few classes. You will realize fixed income is a topic that we discuss within maybe first 2 months. Only few days pending for the exam, he is looking for that tute. What can I do? Definitely you will miss some classes. I know it will happen, but don't wait until the end. It's too late. If you miss a class now in this batch, your group, you are lucky because these classes are recorded and you can access it anytime. Even if you miss a class, you can go back and replay it and watch it. Use those opportunities. Even you attend the class, And if you think some areas were not clear and I couldn't catch that part during the class, you can review it. So don't wait until the end. That's the message that I wanted to pass. Have the structure. What are the topics that we are discussing? What are the interlinks between those topics? Have that structure in your mind. So what I can say, the student has no sense about the course or the content. Without that, you cannot go for an exam. You should have some structure in your mind. What is the course? What are the contents? If you see some topics, in which area we discuss that topic, where we discuss the theory part of that and where we discuss the application of that, you should have some sense about it. Otherwise, it would be difficult. So that's the last. That's one of the things that I wanted to highlight. This is again from answer sheet. The student has answered these 3 questions. He has already put the, I don't know what is this. So don't do these things. This is the area that where I have to put the total marks, not for your comments. Don't do things like that. You just mark what are the questions that you answered and left the other area blank. Finally, I would like to highlight this. In this course, now I'm conducting this in 2019 and onwards, I was the main resource person. But even before that, when Mr. Karunaratna was doing this course, I have attended or I have conducted classes on this course. What I have experienced, what students do is, whenever I do the sum on the board, you just note it down. Before I do the answer, I'll ask you to try it. But they don't do. They just wait and see. So it won't work properly. So whenever there's a question, try yourself to answer that question. Then look at the answer or follow me. Because just listening, you won't get anything. If you see something, you will remember bit. But if you do that, you will remember it, you will understand. When you do things, when you listen, you will feel comfortable. Okay, this is very simple. I can understand this and that. But you will realize there are a lot of questions, lot of gray areas when you are trying to do that. Then only you realize there are a lot of problems or gray areas that you don't know. But if you do it, when you do it, you will learn, okay, this is a problem, this is the answer for that. And this is the way that we should handle this part likewise. So don't wait for me to do all the calculations and things. Definitely I'll explain. But before that, try yourself and come up with answers. Even after I have done the calculations or have given the answer, again you should try it by yourself. Just by listening or just by seeing things, you won't learn many things in this course. You will have to do things to learn. That's the final message that I have to give you in the introduction or at the beginning. So time to time I will remind you all these things, and you will realize what I told now. You will realize during the course. Okay, that's I think that's enough for the introduction part. Any questions? If you have any questions about that, you may ask.
So how can we get presentation and the course materials?
It will be posted in the Google Classroom.
Right. Thank you, sir.
I think already. Okay. This is new thing for you. Yes, even for me. So time to time, institute will upload necessary documents and messages. So I think you can do some arrangements to get notifications to your email or whatever better to email. So monitor those. Set it up as in that way. So whatever the notification posted in the classroom, get a notification to your email.
Is there a WhatsApp group?
Sorry?
Is there a WhatsApp group for this batch?
No, not yet. And the other thing is, the institute will not set it up, but you can create a group. You just decide a admin and create the group by yourself.
Okay, sir.
So one doubt, sir.
Yeah.
So one doubt. May I know the structure of the question paper?
Now itself?
Yeah. Is that possible?
Yes. But okay. Yeah. No, we were thinking about to change slide or make small changes, but okay. Basically, so far the structure is there's a question, we call it for part A, question 1. In that question 1, there are 40 small questions. Out of that 40, 10 questions are multiple choice questions. Can you see this?
Yes. You can.
So yes. This is the 2019 paper. You can see there are two sections, section A and section B.
Yes, sir.
Section A, 40 short questions, carries 40 marks. 1 to 10, first 10 questions are true, false, or there are statements, 10 statements. You have to tell whether the statement is true or false. It's not just true and false. You have to explain. You have to reason it. You have to reason it. Why do you say it's true, or why do you say it's false? That's the first question. Or the first 10 short questions. Then 11 to 40 multiple choice questions with 4 answers, 4 possible. Then part B, that's the essay type. In part B, we have, you have to answer 3 questions out of 5. Out of 5 questions, you have to answer 3 questions. Each questions carry 20 marks. And each question most probably be from one module. There may not be that many links to another module, but saying that I don't rule out it. There may be a possibility that there will be links, or there may be one question that covers more than one module, because that interaction has to be there in the market as well. Anything else? I think
Thank you, sir.
this would be enough.
Yes, sir. Thank you.
Anything else? Any other question?
So previously in your session, you said that not for Sri Lankan context, for foreign context, this course will be supported. So can I get brief idea about foreign opportunities and local opportunities which we can have after completing this?
That's a good question. Thing is, so this treasury, I don't know why did you decide to follow this course. Most probably maybe thinking to move into a treasury of a bank, but there's only limited number of banks in Sri Lanka, and the opportunity is very limited, frankly, in the treasury itself, because not so now in this course now I can see 70 participants. So not only this course, there are some other courses in the market, so which produce qualified person, not only by IBSL, Central Bank, we have another college, Center for Banking Studies, and universities, they have special degrees in finance, master's degrees in finance or financial economics and related things. So you have to compete with them. So that's why, as Gigi said, going out just with the certificate won't help you. You should be able to prove that you have that knowledge. Otherwise, just having the certificate won't help you. So that's one thing. But apart from the banks, there may be opportunities in the maybe primary dealers, brokers, and there are other financial institutions. Apart from banks, there are leasing companies, other finance companies, things like that. Not only that, some corporates also having their own treasuries. Even if you take insurance companies, they have their own treasuries. So those are the opportunities available in the local market, but the competitiveness is very high.
Ishanta, if I can add something there.
Yes.
Just to add something there, I think one thing that was mentioned, that this is one of the courses that is recognized by central bank in terms of the ability to work in a dealing room. So I think if you look at the guidelines, it is mandatory for you to have either this course, the course contract from CBS, or the ACI dealing operation certification to be in a dealing room in Sri Lanka. So work in a front or back office in Sri Lanka, you require this. So this is a prerequisite to that requirement locally. Also, some of the content that is done here is closely linked to what ACI does globally as well. There is no direct affiliation, that I must tell you, but the content, like, you know, from the ethics and model code point of view, and also from the even the technical side of things that is covered, is very closely affiliated to the ACI exams, which is recognized around the world. Now, I think locally, this is well recognized and well accepted. And I think anywhere, if you're going to work in a treasury or treasury linked area, I would think this will do you well. Internationally, I think, to be very honest, it is not as recognized as you know, any other course, because it's not a global course. But because of the content it covers, I think you will find it useful, and whoever looking at it will definitely see, based on the content that you have covered, that it is relevant to any job that you do overseas. Now, the content is very much aligned to what, say, courses like ACI teach. So that's what I want to emphasize,
Yes.
because it is not different to that. It is very much aligned to that. So even if you decide once you do this that you want to sit for a global course or ACI diploma or a different kind of course, this will definitely help you to get into that particular, just for the fact that you might have a more globally accepted course that you can do basically after that.
Thank you, Perry. Yes, that's exactly. As Perry mentioned, these because this is not a globally recognized course, but this will lay the foundation for you. If you want to explore more, get another internationally recognized qualification, this will help you to follow those courses and get that recognition. But the knowledge, if you can illustrate that you have that knowledge, there will be opportunities as well. I have received only 17 responses. I think currently there are 67 participants. I have received only 17. I saw someone has raised the hand. So any questions, please ask. Any questions? I have received only 17 responses. Out of that 17 responses, 65% work for banks, 11 or 12% equally in finance and or primary dealers, and about 5.9% corporates. Interesting. No students apparently this time. Last few batches we had even undergraduates. Most of you work in other, 33%. Oh, that means you are not in treasury, middle office, back office, front office, risk management, audit, operations, trade, finance, not in fund management, brokering, IT, other. That's interesting again. I would like to see what is other.
I belong to recoveries department.
Recoveries. That's one area that I forgot. Yes, that's good. There are two treasury dealers.
So I'm into credit.
Into credit. That operations, IT, one IT, audit, one.
I mean a brokering firm.
Brokering firm. In the brokering firm, yes. When I prepare this, I realized that for the brokering firm, I don't know what to put here, but I just thought you will select either front office or something like that.
Yes, I'm working in the front office.
So there's option for you as well. There's one one from IT. That's another area that I forgot. So IT, they need to know about treasury things, because if they are to maintain the system better, they have the idea about the products and functionalities in the IT. Okay, treasury back office. When it comes to experience, the 33% has more than 10 years, 11% less than 1 year, another 38% 5 to 10 years. Okay, you have a lot of experience. I think you can teach me with that experience. 6 of you have masters, bachelors, another 3, A-levels, another 7, other 1, postgraduate diploma 1. One form with CABF, 5 with DABF, Chartered Accountants 2, CIMA 2. So I didn't see any students in the first category for the first question. Yes, no students in the first question, but at the end, the last questions, maybe while you are working, you may study. That may be the reason. Other 3%, 27%. You are following chartered 4 students, DABF 2, CABF 1, CIMA 1. Okay, that's good. You have some background knowledge. If possible, if you get the chance, fill it. That will give more color on you. I can understand better your knowledge level and how we can move forward. So while you are in the session or later, please fill. It will be recorded. There's no cutoff period for this, so you can fill it at any time, but do it before next week. Okay, and now I'm going to start the formal sessions, the introduction part and background. I think that's enough. We spent about almost 2 hours. The way we do it is like this is a 4-hour session. Having a 4-hour session in one stretch difficult for both you and me. So generally after 2 hours, so around that, we'll take a break about 15 minutes. I think this is a good time before we start the new topic or the first topic that we are going to discuss today. It would be better to take a break. We'll take a break 15 minutes. Okay, if not, one more thing. So at the previous session, someone asked what are the opportunities in the international markets. So there will be a lot of opportunities, as Perry mentioned.
I'm Nipuna here. I asked that question. Actually, I am working for a private commercial bank treasury division for last 2.5 years. So that's why I wanted to know, is there any other opportunities than in Sri Lanka that to go a particular field?
So the opportunity, you have to monitor the market and see whether there are any openings. What I know, so in this area, most of them, people don't stay at one place. They switch from one to other, depending on the opportunity that you get and the openings available in different institutions, maybe within the banking sector, or from a bank to another financial institution, or to an insurance company, or things like that. That that can come. But what I wanted to tell, our market is very small. Even the number of institutions altogether, if you take number of banks, number of financial institutions, number of insurance companies and other corporates, not all corporates have treasuries. Only few big corporates may have treasuries. So within Sri Lankan market, the opportunities are limited, frankly. That's true. But this course is accepted by the central bank to work in a treasury in a commercial bank. That is true. That is there. But the opportunities may be limited within the country. So what I want you to do, or encourage you to see the opportunities outside Sri Lanka as well. If you feeling, I'm not forcing you to go out from out of the country, but that opportunity may be there. You have to do search and find out the opportunities. But unfortunately, the timing may not be very good these days. Globally, markets are not well performed, so therefore there will be some sort of difficulty, but keep trying.
Small concerns. I have gone through some job offering companies and all those things, but in the Middle East there are high demand for the treasury and risk management, asset management in the field. So is there any place to get correct information about that particular markets and all those things? Is there any website or something like that?
No, I don't have anything to recommend for that. Frankly, I have no idea about it. But there are some websites. Yes, you have to rely on those. Go try straight away the website of the particular institute. Or go by that. That would work.
Right. Okay, thank you.
Okay, what I want to mention here is, so one thing. So you have to, whether it's local or international, you have to compete with the other possible candidates. So if you follow this course and you get a certificate, you should be able to compete with them. You should have the knowledge what they have. So even in Sri Lanka, so the central bank accepted qualification, if you see this IBS treasury is one thing. See, Center for Banking Studies, there's another treasury operation course. That's one thing. ACI dealing certificate is another thing. CFA is another qualification. So think about those. So I'm not saying that this course is that good or that bad, but frankly speaking, if I compare this course with a CFA qualified person, not just because of I am having CFA, even the ACI, to meet that, we have to put some extra effort to bring you to that level. Frankly, you won't reach that level doing this unless I make it tough at the exam. So we can't do that. We know that what's your background, and with that only we can bring you to a certain level. We cannot take you beyond that. That we have to accept. That's why I'm asking, and I would like to see this course in future. Maybe internationally recognized course, at least in the South Asia region. Maybe within 5-10 years, if we can attract foreign students as well to follow this. So to get to that level, you have to illustrate that quality. So that's what I'm asking. Don't focus only on the certificate. try to get the best knowledge and understanding and illustrate that you can do this. Have that in your mind while you are following this course. Don't do it just the sake of having another certificate. Learn for the knowledge, then you will get the certificate. If you do this just for the certificate, you may end up with nothing. You won't get the certificate and not the knowledge. If you work for the knowledge, at least you have the knowledge and you can illustrate it. And most probably, for very rare chance, there's only very rare chance, having the knowledge, you won't get the certificate. It is very difficult. If you have the knowledge, you should get the certificate. So work for the knowledge, not for the certificate. I think you can understand what I'm telling. Clear? Are you clear?
Yes, sir.
Yes, sir.
So with that, I expect you to work hard bit. I know it's very difficult while working to do this, but if you have the willingness, you can do that. Cut the time that you spend on Facebook. Use that time to read a paper article or something related to this course. You will get some knowledge. You can't say that there's not enough time. If you manage it properly, you can do that. Maybe while traveling, you can read a book, or on the phone, you can read something. Change your behavior bit, and commit yourself to get a good result. Okay, with that, now I am going to move into the Can you see the presentation? You can't hear, no?
Not that much we can't hear.
Has made the banking business relatively complex and created risks that need to be managed. A key part of risk management is the efficient asset liability management function that identifies profitable opportunities with a balanced division of risk and reward. The term bank is assigned to a number of very different institutions, including commercial banks, which give loans to customers and hope to earn a return between the cost of loans borrowed and cost of loans lent out. Investment banks, which earn fees for their services and act as agents in activities such as mergers and acquisitions. Trading banks, which operate in a number of trading markets, such as a foreign exchange trading desk. Each business line generates different risks, including interest rate risk, that is, the interest rates on assets and liabilities that are subject to change over time and can result in interest income becoming negative. Further, there may be opportunity costs in terms of interest or bonds because newer loans could be made at more favorable interest rates. Liquidity risk, that is, it may not be possible to raise new funds to cover the maturing funds at a reasonable rate. Credit risk, that is, the risk that a counterparty is unable to repay borrowing, and other risks, such as changes in equity values affecting the viability of an equity trading operation. For the commercial and trading banks, risks are not generated as a byproduct of the business. They are the business. In this sense, the banks can be seen as a risk factory. The asset liability management function focuses on interest rate and liquidity risk. The function is so called because it manages the risks of mismatches between assets and liabilities. Matching a 5-year fixed rate loan against a 5-year fixed rate liability, such as a fixed rate bond issue, results in little liquidity or interest rate risk. example, banks might raise funds through customer deposits into checking accounts which have no term. All lending this money to borrowers exposes banks to liquidity risk. The most obvious risk not managed through the asset liability management function is credit risk, as this monitoring and management process is predicated on an assumption of zero default risk. Even without default risk, if a bank's assets and liabilities are mismanaged, the outcome can often be fatal for an institution, as shown by the experience of many banking organizations during the financial crisis. Northern Rock was one such organization that specialized in residential mortgage loans, borrowing funds on a short-term basis while lending the funds for a long period. As interest rates became volatile from 2007 onward, short-term rates increased sharply. Banks like Northern Rock were unable to roll over their short-term funding. As economic conditions worsened, depositors started to withdraw their funds, further exacerbating the pressure on bank balance sheets. Unable to cover their funding requirements, banks applied to central banks for funding to help with the liquidity crisis. While some banks were rescued by the central bank or merged with other banks, others were effectively closed down. The financial crisis was perhaps an extreme example.
So sorry about it that you you couldn't hear it, but I think you got some sense about what it's trying to explain. It's about it. The topic you might see, it was ALM and treasury management, because as I mentioned at the beginning, treasury's major role is to managing the asset and liabilities of the bank. So while doing that, treasury will work on trading financial markets with financial products. So that's why we need knowledge on financial markets and financial products and the risks characteristics of all these products to use in the ALM and risk management process. So I'll elaborate whatever the things showed on that in this presentation, but I'm not sure whether we'll be able to finish this today itself, but we'll continue. So what is a treasury? It's in any organization, that's the financial center. Even at the very beginning of today's session, DG Mr. Karunadilak also mentioned, even individuals, we manage our funds. So we do the treasury management part. We manage our assets as well as our liabilities. So that is the major role played by the treasury. So it's the financial center of a organization. So that safeguard whatever the assets of the organization and work towards the or help to achieve the organizational objectives. That depends on the organization. Organization which is in finance business, the goal may be different from an organization which is in some other business. The corporate objectives differs from the banking objectives of a bank. However, treasury can support to achieve these objectives while safeguarding the assets of the firm and managing the liabilities. There were few participants from corporates. We'll try to address in some instances how should the corporate behave, but it may be different from a bank. But frankly, this course mostly focus on banks. So that keep it in mind. But whenever you have some questions related to your organization, whatever it is, please feel free to ask that question. Whatever the concept that we are explaining, if you are not clear about how that concept is related to your organization, please raise that question and we'll discuss that. So the quality of an organization, treasury, impacts the success of the entire organization. The treasury is the heart of any organization. You might say there are a lot of small business where they don't have a treasury, but they are very success. Yes, they don't have a separate unit in that organization which is called a treasury, but maybe the finance department or somewhere within the organization they do the treasury functions. They may not have a separate division or a department called treasury. They may not have dealers or treasury officers, but they do that in somewhere within the organization while managing their financial assets and liabilities. So that's the basic, and that gives the success of the organization. Not only the organizations which are in finance activities, even the others, the treasury has to play a major role. So in treasury management module, you will discuss that in depth, but I just wanted to do, give a small introduction to treasury management and get an approach. Why are we going to discuss about financial markets and derivative products and things like that? So most of you are bankers, correct?
Yes, sir.
Yes. So you should be able to explain what is the bank function. Forget about treasury. Overall, what is the function of a bank?
Getting funds from customers by savings accounts and giving to other customers loans. That's mean lendings. So they are doing mainly this thing, and they have to get profit from the loans. From that only they can pay to their savings accounts customers. So yeah, so that's the basic.
Correct. That's the core business. So if we talk about in technical terms, customers, those who place deposits, we call them what is the technical term that you use?
Liability.
Whoever who sorry?
Liability.
It's a liability for the bank. No, I mean the customers, those
Depositors.
depositors,
Surplus units.
surplus units. Yes, they are the surplus units. Whether it's a customer or a corporate or whoever who place money with banks, those are surplus units. Those who have money in excess of their requirement. So we have money, we get a salary, we need it to spend in our day-to-day life activities, to get food and travel and all these things. But what we save, what we have in excess of that. So that same concept is applicable for a corporate or maybe other institute. So all those parties we call surplus units. Then on the other hand, those who borrowers, what's the word that we use?
Deficit units.
So those are the two parties that the bank brings together. So there are parties with excess funds, they place deposits with the bank, and meantime there are parties with empty pockets, deficit units. They borrow funds from the bank That is the main or the core business of a bank. But in the world there are basically three types of bank. One is commercial bank. The other type is investment bank. The third one is trading bank. So the business that I explain is mainly the function of a commercial bank. Investment bank, their role is slightly different. And the trading banks mostly focus on doing tradings, buy and sell financial instruments or foreign exchange market or whatever financial instrument. But in the investment bank, what do? They do deals or make deals. There may be parties, those who want to borrow funds to make an investment. So investment bank, they prepare for that borrowing, specific borrowing, and help the borrower to borrow funds directly from the market participants, not through another institution, directly from the market participant. So then by doing that, investment bank gets the commission or fees. It's different from the commercial banking activities. As one of you mentioned at the beginning, the profit they earn is the difference between interest a commercial bank earns on interest through lending and the interest paid to the depositors. Whatever the interest income you get through your lending activities and whatever the interest expenses you incur through borrowing activities. The difference between that is the profit for a commercial bank. But in the investment bank, it's not the case. Investment bank does not borrow, does not lend, but they facilitate others to do lending and borrowing. The fee is the main income. So there are three banking types or three different types of banks: commercial banks, investment banks, and trading banks. So in all these forms, there will be treasury, but the role of the treasury may be vary depending on the business they are in. However, in this course, we will mostly focus on the commercial banking activities, and we may touch on the investment banks and trading banks as well. So this explains that this is the income the bank gets, interest rate on its loans. When they receive four, the bank keeps 3 and pay only 1 to the depositors. So they make the profit. That's the business of the bank. That's how it behave. Because bank takes a risk on lending. You give or grant a loan to a customer or a corporate, whether that corporate or the customer pay it back or not, the bank has the liability to pay back to the customer. So that's why the deposit rates are low while the lending rates are high, because you should have some sort of cushion to absorb losses. You will learn this lot in future. What are the cushions that apply, and from regulation side to protect the bank and depositors, what are the regulatory requirements the bank has to fulfill, capital adequacy ratios, liquidity funding ratio, and things like that. So however, this is the basic or the core function of a bank. with that, so you know, all these activities, as I mentioned, depositors we call surplus unit, issuers we call, or the borrowers we call deficit units. The bank plays an intermediary role. All trades are originate either from the depositor side or the borrower's side, not by the bank. That's the basic banking function and activities. But the thing is, when you do that, you know, if I ask what is the liability for the big portion of liability, where do you see that? In which sector for a bank?
It is depositors.
Is depositors. Bank has bulk of its liabilities towards depositors. Okay, depositors. If you take deposits, what are the tenors of those deposits? What's the range?
Short term and long term.
Yeah, what do you mean by short term and long term? What's the say?
Short
If you
term
put
up
it
to
to
1 year.
if you put it into number of days and or years.
Short term means less than 1 year. Long term means more than 1 year.
Okay, but if I ask you the deposit or the all these deposit short term, everything in 1 year.
No, 3 months, 6 months, 9 months.
No, 1 month and 3 months, 6 months. Even you can get it for the 1 week also.
Okay.
Overnight.
Okay. Yes, that's the thing. So in a bank, bulk of deposits, is it in fixed deposit form or savings?
Fixed deposits.
Fixed deposits.
Yes.
Not saving.
Most of the cars are actually current account and saving accounts.
Yeah, it should be. Mostly the balance sheet is funded through the current accounts and saving accounts. So what is the maturity of those? That means
Overnight.
Overnight, yes. Anytime the customer can ask, funds. So bulk of your liabilities are very short term. So just go and check your balance sheet if possible and see what is the structure, what is the percentage of your deposits in savings, fixed deposits, and if it is fixed deposit, what is in the 1 month, 2 months, 3 months period, 6 month period, 1 month period, and what is the portion in the more than 1 month area, like say at least 2-3 years. I think it's 2-3 years very low portion, but bulk is in the very short term nature. Correct?
Yeah, correct.
Yes. Now take the other side of the balance sheet, assets. Where do you see the assets?
Most of them the short term and majority.
Most of them are short term.
Yeah.
No, assets are actually long term.
Long.
The assets of bank contains in the loan portfolio.
Yes, correct. Okay. Let me go one step back. Can you explain me what are the possible assets of a bank?
Fixed asset, current fixed asset.
The majority consists with the loan book.
The loan and the
Loan and the
most of
advances.
the loan.
Loans and the
The accommodation granted to customers.
whatever the name you use, however, it's a lending.
Lending.
The bank gives money to a customer. Whatever you lend, it may be a mortgage loan or the whatever you call housing loan, mortgage loan, or other facility for a corporate to establish a factory, whatever it is, or maybe OD in a current account. All those are assets. Other than that, what other assets?
Investments are there, bonds, treasury bills,
Yeah,
and central bank reserves.
Yes, there will be investment in treasury bonds, treasury bills, and as he mentioned very quite correctly, the reserves with the central bank, which plays an important role. We'll discuss that aspect of that reserve. What else? What else you have? Is that all?
Foreign currency placements.
Yes, then it comes to a question when we say assets, in which currency? It may be again a loan or whatever facility in foreign currency. That is true. So basically all these things are assets. Other than that, fixed assets and things like the buildings and things like that. I'm here mostly referring to the financial assets. So however, in a bank, bulk of it is in the form of loans. Now we'll move into the liability side. What are the liabilities of a bank?
That is covered deposits from the customers, then borrowing from other banks or any other foreign currency borrowing from other institutions like in foreign banks.
Yes.
All are having liabilities.
Yes. Basically, whatever borrowings done by the bank, it may be in foreign currency or local currency, it may be through a saving account, maybe a FD, or maybe a borrowing from a corporate in a bulk form, or maybe another borrowing from another bank, whatever. So those are the liabilities. First thing that you have to identify that what are the assets of a bank and what are the liabilities of a bank. So deposit taken is a liability for a bank, and loan granted is an asset for a bank. That you have to be clear. Then in general, liabilities are short term in nature. Most of the liabilities are short term, and most of the assets are long term, because you give loans for 5 years, 10 years, things like that. What is the technical word that you use for that mismatch or doing that business? Borrowing short term and lending long term.
Liquidity.
Maturity mismatch.
Maturity mismatch, but the mechanism that we do that, we call another word, maturity something.
Liquidity risk.
No, that's the risk arising from that.
Maturity gap.
That is how do you identify that risk. The activity or the process that you do that, borrow long, short term and lend long term. We use a
portfolio management.
Not necessarily. No, not. It's with maturity. Maturity and another word. If you have done banking
analysis.
Sorry?
Age analysis.
I didn't hear the first word.
Age analysis.
Age analysis.
Yeah, maturity.
That's like a gap analysis. No, again, it's the way of identifying the risk. But I'm asking, what is the process? That process that you called.
Is that liability management?
Yes, you have to do that management, the matching part. That's the asset liability management. No, what I'm referring to, borrowing short term and lending long term. What do you call that? Because you borrow short term funds, but you lend long term. So how do you manage? Is the ALM, asset liability management? How do you identify the risk? Is the or what is the risk that arising due to that is the liquidity risk, and how do you identify, that's the gap analysis, and all these things are correct in that. But what do you call that, the process that you do? Have you ever heard a word about thing, maturity transformation? That's we call maturity transformation, because we borrow short term and lend long term. That is called maturity transformation. By doing that, as you all mentioned, the bank faces a problem. What is that? If customers ask their money back, no bank in the world manage to pay back their depositors advance. We do that business assuming that not all customers will ask their deposit at the same time. With that assumption only, we can do the banking business. If that happens, that's the end of the bank. So to have that, bank should have the credibility. Bank should have the credibility. Once you lose that credibility, there will be queues in your ATMs and bank branches, depositors asking their money back. That's what happened even in Sri Lanka, in some of the financial institutions, for whatever the reason. They might have assets, good assets. They may be good assets, giving good profit or good return, but still they cannot meet their liabilities, all liabilities at once. That's the risk of doing banking. The role of the treasury is to manage that. The word that we use, liquidity risk, even you might have seen in that video, liquidity risk. And it talks about the Northern Rock. During the financial crisis, a UK bank fails because they have lent or exposed in the mortgage sector. With the global financial crisis, bank or the mortgage sector did not perform well. Then the depositors of Northern Rock thought the bank may not be able to pay their money back, and they wanted their money back immediately. There were queues in front of the bank. Ultimately, Bank of England has to intervene and lend money to the bank and take some actions to prevent the bank is failing. They nationalized the bank, private bank. So liquidity is a major concern of a bank. So when you say liquidity, what is the most liquid asset you can have?
Cash.
Cash. What's the return that you get?
Zero.
So more liquid, low or less return. So while maintaining liquidity, you have to maximize profit as well. So that's the role of the treasury. Treasury tries to manage liquidity while maximizing profit. So therefore, in order to do that, treasury manages its clients, because treasury deal directly with some clients, maybe corporates, or that depends on how do you organize your treasury within the bank. You might have a separate desk called corporate desk or something like that, or in some banks there may not be a separate desk for corporates, but however the treasury may deal with corporate clients or maybe other banks. So they do deal or do transactions in the financial markets and in financial products. So that's why we need to know about markets. I'm not going to talk about clients definitely, and markets and products. What are the markets, or what is the market that Treasury operates, and what are the products they have to borrow funds or lend funds. Even banks sometimes might face excess funds. The bank itself becomes a surplus unit. Sometimes the bank itself becomes a deficit unit. So that has to be handled by the Treasury. If you are in a deficit position, you need to borrow. If you are in a surplus position, you need to lend. So all those things happening through Treasury in the markets and through products. That's why we need to discuss about financial markets and financial products. So however, Treasury does it to provide funds to meet the bank's obligations to depositors. Not only depositors, once you grant a loan to a customer, then you have the obligation to give that funds to that customer, disburse the loan. You grant the loan whenever customer comes and say, okay, I have, so I want to withdraw funds. Then you cannot say, sorry, today we don't have enough money. Can you come tomorrow? Even he is a borrower. You can't do that. Can you do that? Can you ask a borrower to come later to take his cash? No, you can't do that. So
Can't do that.
that becomes a liability. Even you as it becomes a liability, So you should be able to pay that. So provide that funds. That's the major task of a treasury, especially in a bank. And depending on the banking or the model, help borrowers and issuers raise funds, especially in an investment bank. The treasury helps other borrowers to raise funds in the financial market. And nowadays, the bank does not want to carry a lot of huge assets on the bank balance sheet, but tries to give it away and provide investment alternatives and earn a fee income. That's the trend. But with the financial crisis and other developments, there were some problems on that. But that was the trend. Apart from that, the treasury, they try to earn extra profit through trading. So they try to buy and sell, or sell and buy financial instruments of other products in the market just to make a profit, just to make a profit. Sorry, can you all mute your microphones whenever you don't ask any questions or comment? As I mentioned, the last point, the treasury tries to increase the fee income through deals structuring. The deal structuring means provide other borrowers to borrow directly from the market. We'll discuss those things in the primary markets. How do they do these deals? But just an overview, because here we are not going to that much discuss about the investment bank. So when the bank does it, they face the interest rate risk, interest rate exposure, foreign currency exposure. How? Now, okay, if you take a deposit for 3 months, you have to pay that interest. But you take a deposit for 3 months and lend it for 1 year. What would happen? After 3 months, the bank has to borrow again, because you cannot ask the borrower to pay back in 3 months. The borrower has borrowed it for a 1 year period, but the deposit is only for a 3 months period. You have to fund it again. By that time, if the interest rate has increased, you have to borrow at a higher rate. So not only that, even after you lend it for a 1 year period, the next day, if the market interest rate has gone up, you lose or you miss some opportunity. There's opportunity cost. So likewise, you face the interest rate risk. So the Treasury has to manage that interest rate exposure. As you mentioned, some of you mentioned, bank deals with foreign currencies. You buy foreign currency, you sell foreign currency. Then you get the exposure to exchange rate. When the exchange rate changes, value of your assets or the liability changes if they are in foreign currencies. Then, as I mentioned earlier, bank may borrow from another bank, or bank may lend to another bank. So therefore, they have to make or manage the relationships with other banks and other customers. The Treasury itself, they have to do that. And provide cash and working capital for the bank. What is the working capital for a bank? The bank should be able to not only to pay for its customers for their deposits and things like that. What will you do if the bank fails to pay you a salary? And what if the bank fails to pay its electricity bill for other service providers? So you have to manage all those things. To do that, all these things, there should be a proper cash flow forecast. This is very important. Whether you have good enough or good assets, it won't adequate. You need some cash flows to manage your liabilities. And meantime, then while you are doing all these things, you have to report, Treasury has to report to the management, showing your status and risk and all those things. Not only to the management, the other authorities like central bank. It's a big headache, no? Central bank. So they ask this and that to provide this report, that report, and everything. So you have to do that. So all these activities are carried out by the Treasury to meet its objective. So key variables that Treasury looks at are amount, tenor, currency. While they are doing that, they expose to the risk. What does it mean by amount? It may be amount of assets and amount of liabilities. That difference is what matters indeed. Say, what is the amount of assets maturing today, and what is the what is the amount of liabilities maturing today? That difference matters. Okay, assume you have more assets maturing today than more liabilities. Do you face any risk? You have more assets maturing today than liabilities. Is there any risk? Or is there anything?
You have excess.
You have excess funds. So what do you do then with that?
So excess funds means we need to, there's a cost of funds, so we need to reinvest it for a proper income. Otherwise we are in sort of interest income.
Yes, definitely. That's the thing. Even you have surplus funds, it's not that you can be happy.
Actually, what is yes.
Whenever you
that
have
is what
Yeah, go ahead.
That is what happened to the banking sector now, Mr. Nishant.
Yes, exactly. They have funds. But
Yes.
there's no place for them to lend. But I have a doubt whether there's no place or they don't want to. That's a different thing. We'll come to that because you don't want to lend to anybody. Whoever who comes and asks money, you don't give it. You have to do some assessment and see whether that person or that whoever borrower's ability and willingness to repay it. If it is within your parameters only, you lend it. Otherwise, there will be people to borrow or people or institutions to borrow. But you have to make some assessment and lend. So now what has happened within that parameters or within the bank's willingness to lend, there's no borrowers. So
Sir, one small thing. Sir, can I ask you a question?
Yes, sure.
Now, there are instances the banks can lend, but only thing the rate demanded by the customers doesn't give a risk premium, compared to investing in government securities. So that's one other reason why the banks are little reluctant to lend out, because they feel it's more safer to invest in government securities than to lend to customers.
That's what I mentioned. So you have your parameters. You assess the customer, and if you don't see the return that you get is not adequate to the risk that you are taking, you won't approve that. You won't lend to that customer. It's better to invest in somewhere else, which is safer, while accepting a low return. That's happening nowadays. That's what, isn't it?
Yes, sir.
Now banks have money, but they are reluctant to lend to the really needy people because of the risk. Yes. So that all those things has to be managed in a bank. So my focus here is the amount. So you have to think about that amount, the difference between assets and liabilities. If it is surplus, that means more assets than liabilities, then you have to think about a reinvestment. Where to invest and for which period? What is the period that you are going to invest? Whether you invest in a treasury bill or a treasury bond or just lend it to another bank overnight, whatever. So that's the decision that you have to think. So that's why I say the amount is a key thing. Then the tenor counts. Okay, sorry. In the amount, I explained only the surplus side. If it is a deficit, your liabilities or maturing liabilities on a particular day is more than the maturing amount of assets, you are in a deep trouble because you are not in a position to meet your liabilities. The moment that happens, your credibility is gone. All the depositors will be at your ATMs and in front of your branches. You don't want to fall into that. What do? However, you have to borrow funds. So when you are in a deficit position, so you have to borrow. That is also done through maybe borrowing from another bank or maybe from the central bank. We'll discuss. There are mechanisms. Banks can borrow from central banks. However, you have to borrow. So that amount is a problem or a matter or a key variable handled by the treasury. And the timing, not only the amount, the timing. So when do you have maturities of assets? When do you have maturities of liabilities? That's what someone explained. The difference between assets maturities and liabilities. Then we do a gap analysis and identify where do we have surplus funds, where do we have deficits. So, and even when you lend, you have to think about the maturities, whether you lend it for a 10-year period or a 1-year period. Nowadays, what is your preference as a banker?
Short term.
You would like to lend it for a short term. Why? That's another thing. So you may stop answering my questions because I asked the question. When you provide an answer, I ask the reason as well. So so don't stop answering questions. So get ready with the reason as well. It's okay if you don't provide the reason. We'll explain that as well. We'll discuss. We'll have a discussion on that. But that's my style. You provide the answer, I'll ask the reason. Huh? Don't worry about it, but still keep going on. Okay, what's the reason? Why do you want to lend short term these days?
Sir, one reason is the environment, the present environment, volatile. The other thing is,
sorry, what environment?
The current environment, because uncertainty in the environment, because of that.
On what?
Because not many people are going for new investments, and business is also has been slowed down. Manufacturing is little low, likewise.
So basically, economy is not doing well. Not only domestically, even in the globally. That's yes.
Other reason I feel is now the interest rates have almost hit the rock bottom. No? Then because of that, the depositors also place their deposits short term, anticipating an increase at maturity. So because of that, lending short term would be prudent, I believe.
Okay. So now you explain two things. The economy is not doing well and interest rate are at the bottom, in the historical bottom, but it's not the bottom. We don't know. There's room to go down. Have you ever seen negative interest rates? Have you ever seen negative interest rates?
In other countries, yes, sir.
Yes. So that is possible. It's not something impossible. Yes, few years back, it was like impossible thing, but we have seen that. We have experienced. Okay. What I wanted to ask you, now you think the economic environment is not good and interest rates are at the bottom. So when do you expect this economic activities to come back to a normal level or start to boost?
So the way I understand, this whole year also will be like this.
This whole year. So after that it will happen.
Gradually pick up because mostly this pandemic situation is to be, is responsible.
Yes. No. What I wanted to highlight is, yes. So it's not only about when you take a decision, investment decision or investment decision or borrowing decision. It's not what matters is what is the status of today. Yes, that matters, but it's not the only reason. If you think now the economy is not in a good condition and the interest rates are at the bottom, but if you think this situation will not improve for another 2-3 years at least, what do you expect from the interest rate side? Then the interest rate will not go up. If you think this economic condition or this pandemic situation will not resolve or the condition come back to normal within 2-3 years, then the interest rate won't go up. If you think this will be corrected within few months or within this year, then we'll go back to normal quickly. That's the important thing when you make a decision. If you think this will be corrected quickly, then you should go for a short period. But if you think this condition will prevail for at least medium term, then you have to go for an investment for a long gain. Even borrowing, you should borrow at this rate for a long period.
But Mr. Nishant, only that we have to do that investment when comparing to that short-term liability. That is that there should be long term. We have short term. Yes.
Yes, that's true. You have to think about the liability. Yes, that's what I mentioned. So now say what is the 5-year government bond yields now?
I think somewhere around 6%, 6 to 7%.
Okay, say 6%. What is your 3 months deposit?
No, it's about 4%.
Yeah, 4.25.
2.25 or 2%?
4 points. 4 points.
4 point?
Yes.
I don't see in banks that. Okay, say 4%. Okay, 4%.
Yes.
And
that 2% is somewhere around for the savings deposit. We are talking about the fixed deposit.
Fixed deposit 3 months. Okay, 4% and 6% for government bonds for 5 years. If you think say within next 5 years, if this environment will remain there at least for 3 years before we'll pick up, what you should do? You borrow short term and invest in 5 years. You maintain that margin, because since the interest rate remains the same level, even the depositor will redeposit at the same rate.
Yes, that's true.
That's true. So meantime, you have to be cautious whether there will be a situation that even the depositors, they face financial difficulties, they withdraw their money, and you are not in a position to fund your 5-year investment. That has to be. But saying that you don't borrow 3 months and lend 3 months, you don't do that. You borrow 3 months and lend 2-3 years. Where you place your funds depends on your view on the future as well. It's not only the current status. That's what I'm trying to say. If you think this will recover quickly, then there's a high chance of interest rate to increase. Then you don't go for a long term. Then you go for a short term investment. But if you think this will prevail for a long period, then you will go for a long term investment. So the current situation plus what is your view on the future matters. Or you have to think about it when you place or take a decision. So when you decide this tenor, all those factors have to be considered by the Treasury. Timing of cash flows. Is it clear? Any question?
Yes, for Mr. Nishant to take in such a decision, what kind of economic factors are more important in Sri Lankan context? Because you know that our market is more volatile. The predictions always not a prediction. Trends get changed. That fluctuations are very frequent. Therefore, in Sri Lankan context, what are the basic economic factors we need to think about?
I think it's not only for the Sri Lanka, for any country. So basically economic growth that we have to think about, and government debt. and whatever the foreign currency borrowings and things like that. But when we broadly say growth, GDP growth, then we have to think about what are the factors that drives GDP. Where do we receive income and things like that? Then what would be the pressure on the inflation? All those basic economic factors that we have to consider. But when we do that, we may have to specific to a particular country or things like that, because as I mentioned, what are the things that contribute to the GDP in Sri Lanka? If you take Sri Lanka, those factors may not affect in other countries. Their GDP may be based on some other factors. So if you take Sri Lanka, we are heavily dependent on imports, consumer goods and investment goods. So that's one thing that we have to think. And what are the major sources of income? What is the contribution from agriculture to the GDP? Service sector, what is the contribution? Things like that. And for foreign currency income, what are the income sources? That all those things we have to consider when we take that decision. So there you have to have a good research team to get that. You may have to have your own models and test and see whether you can forecast much better than others. If you just go by the information available in the market for others, that would be same for everybody. Then everybody should take the same call, but it won't happen. Different people will take different calls because of the information set available for different people may vary, and the way they look at that may be different from one group to another group, or one person to another person. And how do you analyze that? All those matters when you take the decision. Not everybody want to lend same time. If it is the case, you won't be able to do that. When you try to lend, there should be a borrower. But some instances, broadly, there are maybe 80% in one side, 20% in other side. Then you face difficulties in doing that business. Did I answer your question?
Yes. Actually, that is the argument in the market, because some experts say that rate might be stable for 3-4 years, and some might say that it is within a period of 1 year it will be changed. That's why that the ALCO committee is in a trouble whether we are going for a long-term investment or whether we are going for a investment like treasury bills like that. That's complex there in every ALCO meeting.
Even in the normal condition, that would be there. Nobody can forecast. So before 2020, even 2020 January, unless before we reported the first case, Sri Lanka was not thinking about COVID. Even it was there in China, Sri Lanka was not was not ready to think. So things like that can happen. Unforeseen events can happen anytime. That is difficult to predict, but with the available information, with reasonable judgment, we have to make a call. And depending on your experience, all those matters when you take decisions. That's why different, as I mentioned, different people take different opinions and different investment decisions. And not only that, your willingness to take risk, ability to take risk, your risk appetite, all those things matters. So, is it clear?
Yes, yes. Thank you, sir.
Okay. Then the tenor, timing of cash flows, as I mentioned, the bank should have enough cash to pay its obligations. This, as I mentioned, the timing of cash flows determines the gaps or the gap position. So in the short term, whatever the maturities of loans and whatever the maturities of borrowing, that is deposit of a bank, in the same currency or maybe in different currencies, that will create gaps. That timing and amount that we have to pay attention and decide the gaps. Whether it's in the foreign currency or local currency, period in maturities and the amount matters. So you will discuss about gaps and gap analysis in the ALM section. So, and the mismatch in currency, the Treasury look at the currency as well. In which currencies you have assets, in which currencies you have liabilities, whether there's any mismatch, if it is what is the risk, because if there's any mismatch in assets and liabilities in different various currencies, when the exchange rate changes, value of those assets and value of those liabilities change. That may gives you a profit or a loss. That may put you in trouble. Say you are short in dollars. You have a liability in dollars, but no assets to match it. Then what would happen? You have to go to the market and buy dollars. If by that time, if the exchange rate increases in Sri Lankan context, then you have to pay more rupees to buy that dollars. That will be a problem. Then you have to generate more rupees, borrow more rupees. Then you may have to pay more interest. All those things matter. So therefore, in a treasury, the amount, that means the difference between amounts in assets and liabilities, and the difference between maturities, that's the tenor of assets and liabilities, and the differences in currencies. All three variables matters, and these three are the key variables, because with mismatches in these three variables, the bank faces risk, various risk: liquidity risk, credit risk, market risk. What is liquidity risk? Can anyone explain me what is liquidity risk? Any idea? Then credit risk?
Liquidity risk in the sense not having sufficient funds to maintain day-to-day operations.
Yes, not only to maintain day-to-day operations, yeah, basically to meet
the liabilities, pay debts and
yes,
money which customers demand from their account.
Yes, in simple terms, ability to meet your obligations, whether you can fulfill all your obligations whenever due. That is the liquidity risk in that context. So if you have more assets than liabilities, you don't face that much liquidity risk in that scenario, because you have excess funds. But you face liquidity risk when you have more liabilities than assets maturing on a particular day or a particular time period. Then you have to generate more funds to meet your liquidity requirements. So that is the risk, liquidity risk. Then what is the credit risk?
Fault of borrowers.
Yes, borrowers may default. They may not pay on time.
Probability of default by parties.
Yes, that can be a probability. Yes, the one of the measure is the probability, but the risk is the party may not pay you on time, whether it's principal or interest only or both. That's the credit risk. What is the market risk?
Foreign currencies.
Yes, that's only one component of market risk. Market risk generally refers to the changes in your value in your assets and liabilities. For whatever the reason, it may be foreign exchange rate changes, value of your assets and liabilities changes, interest rate changes. We will learn. If interest rate changes, value of your assets and liabilities changes. If you have stock market price changes, your assets value changes. If you deal in commodities, commodity price changes, value of your assets or liabilities change. So that is the market risk. But as a treasury, you mostly focus on the liquidity and market risk, not that on the credit risk. Credit risk is handled separately. So liquidity risk, so that is the chance the bank will be unable to liquidate enough assets to meet financial obligation on time. If you don't have enough cash flow funds to meet your obligation, what do you have to do? Either borrow or liquidate some of your assets to meet your obligation, whatever possible. If you can't do that, then you face the liquidity risk. So in the second para, it explains when do you face this sort of risk. So liquidity risk occurs when the maturities of assets are longer than the maturities of liabilities. Then there's a mismatch, or it may be different currencies. Then you may have to buy one currency against another to pay your liabilities. Credit risk, as you mentioned, it's the chance of that a borrower will default or unable to repay the principal and or the interest on time. They may pay lately, but still there's a risk. You will face problems. Market risk, as I explained, interest rate changes, foreign exchange rate changes, commodity price changes, even the stock price changes reflect in your balance sheet. That is changes the value of balance sheet or your profit and loss. That is market risk. But here we'll mostly focus on the interest rate and the exchange rate in this course. So therefore, Treasury manages the bank's liquidity, cap-in position. That means where do you keep the gap? Now you mentioned nowadays bank does not want to lend long term, but would like to lend short term. But on the other hand, would you like to borrow long term or short term?
Long term.
Long term. So what's the gap you are creating by doing it? Your liabilities are long term, your assets are short term. So that is gap in position. You create a gap by doing that. We will discuss whether it's a positive gap or negative gap, things like that. However, that creates a gap because you have short-term maturities of assets and you are going to create long-term liabilities. That creates a gap. Whether it's good or not, we'll discuss later. So that decision has to be taken at the top level. of the bank, ALM committee with the support of Treasury. And the net exchange position, whether you keep more dollars or more euros or more rupees or whatever currency, that depends on your view on the exchange rate. That exposure we call that is the net exchange position on the foreign exchange rate. Exposure to other risk. So all those things done by the Treasury by coordinating the 4 variables that we discuss: amount, tenor, currency, and the risk arising due to that. So in summary, the difference between assets and liabilities in amount, that will create the liquidity, whether you are liquid or illiquid, whether you have excess funds or deficits. Tenor, the differences between tenors in assets and liabilities create your gap. Differences in assets in foreign currencies and liabilities in foreign currencies or different currencies rather than foreign currencies in different currencies, that generates the net exchange position, the risk in assets and liabilities, and with all those things the bank exposes to different risks. That's the sum. Treasury manages all those things. So in the coming few slides, I'm going to discuss a little bit more on the liquidity, because the word liquidity is we use in different context in different times. So basically, liquidity is the ability to meet all financial obligations of the bank without any delay. As a bank, you should be able to pay or meet your obligations. Not only that, that reflects whether bank can acquire new assets or generate new assets whenever the bank wants. Okay. Now, there's a good customer, you want to lend him 10 billion or 10 billion rupees, and it's a good, you get a good rate of return. But if you don't have funds to lend, then you lose the opportunity. So therefore, in a bank, liquidity investment doesn't mean only the liabilities that you have to meet. You should be able to generate new assets, good assets. So that has to be considered. And as I mentioned, and as it was in the video, Northern Rock is a famous case in the recent past. So now it's about 12 years back. Failure to meet depositors' obligation, that would lead to a bank run. What does it mean? Depositors will demand for their money, everybody at the same time, which is not possible to meet by any bank. What would the problem is, what would happen if one bank fails? That's the difficult or the big problem. What would happen if one bank fails in a system?
Then it will affect the banking system, because the depositors of other banks also going to withdraw their money. Then the system will be collapsed, because banking are not holding all the deposits with them. They are investing in some kind of investments. So at once, if the people come to withdraw their money, banks will not have adequate liquidity to pay their debts. Then it will mislead people that banks are bankrupted. Then it will be an issue.
Yes, that's true. That's the thing. The failure of one bank is a micro event, but its ripple effect may be failure of other banks due to different various reasons. The first bank to fail, it might have had some liabilities towards other banks. Failure of that first bank may trigger liquidity events in the other banks also. That's one thing. Then they will be in trouble. That's what happened in the during the financial crisis. And not only that, whenever one bank fails, even the other bank get panicked, and they are not sure about, or they cannot trust others. They won't lend each other among banks, not the customers. Even among banks, they won't lend each other. That will create a problem in the system. Thirdly, the customers, depositors, they'll get panic and come to all banks and asking their money, putting all banks in the system into a trouble. So therefore, liquidity, managing liquidity is the prime concern, and that's the major risk for a bank. You fail to do that, that's the end. What is
a small concern?
Yes.
I've seen some private commercial banks purchasing other banks' shares in the share market. So will that affect to the liquidity issue?
Purchasing shares, it's not directly to the liquidity, but say bank A purchase, bank A
purchases 1 billion worth shares from B bank, but B bank fails, then definitely bank A will have effect.
That depends. If the bank A has sufficient funds to absorb that loss, say you invest 1 billion in bank A invest 1 billion in bank B bankrupt, you lose 1 billion. Bank A lose 1 billion. But if you have enough, bank A has the capacity to absorb it, it won't affect the liquidity. It will affect the profitability, and there will be a loss that could happen. May not affect the liquidity, but directly, but there will be indirect impact. That depends on the stake that, say, when the market get to know that bank A has the exposure to bank B 1 billion and it's a substantial amount to bank A, then the bank A will, if the others start to speculate, then the bank A also in a trouble due to this, then other participants in the market will reluctant to lend to bank A. That may create a liquidity problem. That can, because once you invest, you don't expect, especially in shares, you don't expect that 1 billion to come at once.
Yeah.
What you expect, whatever the profit.
Yeah.
It won't impact the liquidity. That's why I mentioned. So liquidity and the quality of assets are two different things. There will be an impact on the liquidity. What liquidity means? The ability to generate cash now, today, to meet your, say bank A has invested 1 billion in bank B. Bank B gives us superior return, but bank A has failed to meet a 1 million payment today. That is liquidity risk. Fail. Whatever the investment that you have, irrespective of that, you fail to meet your obligation as a bank, you are in trouble.
Right.
So depositors bring money because they believe, as I mentioned earlier, they believe bank can repay it, and the bank thinks depositors will not ask that money same time. So what bank sells is credibility. The moment the bank loses its credibility, that's the end of the business. So that's why bank has to maintain that credibility to make sure that there are regulations and things like that. That regulations are there to make sure the system won't get any impact. Maintain the credibility of the system as well, not only individual banks, and the credibility of the system. If the depositors or the general public lose their lose their confidence about the system, then it will be a disaster. So maintaining liquidity is about surviving. You have to survive today before you think about 10 years or 5 years or even tomorrow. Survival of today is managing your or meeting your liquidity requirement today. So this is the one that you ask. The bank can make a bad deal. That means bad transaction. You make a loss. It won't be a problem. But even a very small amount, if the bank cannot pay it, then that would be the problem. Banks may make losses, but it should not be a substantial loss that erode your all profits and capital. So until you make losses which is absorbable within the balance sheet, it won't be a problem. If you can absorb it, it will be fine. But liquidity is not like that. Even you fail to make a small payment, that would be a problem. So never afford to be illiquid, banks. So what would happen if bank becomes illiquid? That means they cannot pay depositors, pay any of their obligations. As I mentioned, salary, electricity bill, water bill, other service providers, all those things. You may not be able to pay all those. So ultimately affect the liquidity of other banks, because the first failed bank may have liabilities towards other banks. Those are generally big amounts, so that will create liquidity problem in other banks. Ultimately, in the macro picture, that would be a collapse in the financial system. So therefore, the liquidity is very critical. That's why the central bank time to time provides some liquidity to banks just to maintain the system. But it does not mean that central bank provide liquidity at any time, at any cost. It's not the case. There are restrictions and things to be met by the borrowing bank. However, the central bank is there to provide liquidity just to make sure the system is not affected, or there won't be any systemic issue. That's why central bank is there. Central bank generally does not worry about individual banks. Failing a one bank, it won't be a matter unless there will be a repercussion on the system. That's why in US they let some of the banks or the institutions to fail, like Lehman Brothers, AIG, but some of they bail out. That depends. In UK, Northern Rock, the government didn't want to let the bank bankrupt. The government and the central bank took some actions and restore the system configure. So time to time, depending on the condition, depending on the quality of the bank or the other institution, the central bank decide what to do. There's no 100% guarantee that central bank comes and bail out any bank. So in that, what is the role of the central bank? It does not limit to the liquidity problems, not only providing liquidity to the system, but it controls the money supply. So I think this is a good point for us to stop. We'll discuss next week what is the role of the central bank and what is money supply, how the central bank manages money supply, what would be the impacts in the financial markets and banks in the changes in money supply. Okay, so before we stop, any questions or any comments? So this is the first session we had. Now it's good time to give any comments. So how do you feel? Do you have to do some changes in the way that I present? Definitely, when it comes to more technical things, rather than going showing you the presentation, I'll use the board. Definitely, that will happen. Today, these things, this introduction, I thought nothing to write on the board and use the board. I can that's what I did, but in the coming weeks you will see that difference. Or other than that, any comments, any questions?
So a small concern.
Yes.
Really sorry, I couldn't log into the Google Classroom. So, sir, have we provided the course content previously? Because then we can go through and ask questions when you are delivering the lecture, or else we need to go through back the lessons, and after that only we can ask questions from you. If
yes.
we can.
Yes, I can see. Syllabus is there, and the first presentation is there. What I did at the beginning. Generally, we post the presentations before the class. Yes.
Before the classes, right? If we have 2-3 days before the class, then we can go through and make questions what we need to get clarifications. Likewise, then we can go search more through internet and referring books and all those things we can do before the classroom. Then that will be effective thing, as I think. That's why I ask.
Yes, definitely that would happen. We'll post. Generally, that's what we do, and the handouts what we have prepared based on the topic. So it may not exactly for a particular week. We may discuss the same topic maybe 2-3 weeks, or depending on the phase that we are going, depending on the questions that you ask, what's the time that we taken to answer those questions. The phase may changes now. However, you will get 2-3 handouts, or at least 2 handouts in advance.
Right. Okay. So another concern: do we have any weekday classes or workshops in this course?
Generally, no.
No, right? And the exam will be held on a Saturday or a Sunday.
Generally, we did it on the same time.
Right.
That's the but depending on these conditions, there may be exceptions. But I think when it comes to your group, we may see more relaxation and things, so it won't affect that much, hopefully. Going back to your question on the weekday thing, we don't conduct classes in weekdays. Even for the last batch, though we missed few classes, we didn't conduct weekday classes. But again, that depends. Say for some reason, say in future, there's a lockdown and nobody can do even be unable to do the online class, then we miss, say, 1 month period. Then what do you want to do?
Yeah, then there is an issue. Then
Either we can decide to have some weekday classes and catch up those, or push the whole schedule into the future.
Yeah.
So that depends.
Hope for the best, not
Hope for the best. Yes.
it will affect the course.
Yes, and the comment that I wanted to make about the weekday thing, other thing, if we be in a position to give group assignments and the presentation thing, then it's up to you to decide how do you meet if you want, and how do you arrange and get ready for that.
All right.
We don't say that you do it on the weekends or weekdays. You may have to spend some time on that.
All right.
That depends on the group and the other factors. Other than that, generally we don't do anything or conduct classes or any session during week or weekdays.
All right.
We try to stick to on to Sunday, 8:30 to 12:30.
Okay, thank you very much, sir.
Any other comments?
Sir, I have one doubt.
Yes.
We having exams in which month? October or like November, like that?
We'll say October.
October, no?
Yes, probably.
And do October, no?
Huh?
October, no? Most probably October.
Most probably October, yes. If this is February, yes, towards October end. If it goes
Then do we having group assignments also?
That's what we plan. Again, that depends on the
situation.
Yes, situation, whether we can do it. But
then
2019 and previous batches, they did presentations and things like that. That's how we conduct this. But unfortunately, last year we couldn't do that. And not only that, yes, 2019 and previous batches, we had a session on visiting a treasury as well. We took them to a treasury of one bank.
And then one last thing.
Whether you lucky.
Yeah. One last thing I would just want to know.
Yes.
That if we having classes on Sunday, can we have the soft copies like on Wednesday or Thursday, so we can get the printouts and we can get ready for the session?
Yes, generally that's what happened. We'll post things early.
Okay, sir. Thank you, sir. Thank you.
Anything else? Any comments? No. So can you understand what I'm telling or explaining?
Yeah, sir, we can understand.
So far, so good. Yes. Okay. Okay. Before I forget, so you have time. So if you have access to your systems or whatever, can you find out, say, if I play, so this is a hypothetical situation. If I place a deposit in your bank, say on Monday, tomorrow, that means 22nd February, say for a 3-month period, then you note down, you know what is the interest rate, note down all those things, the placement date, then the period, 3 months.
90 days, right?
3 months.
It's almost 90 days.
Okay. Then So I'm telling it 3 months. I'm not saying it's whether it's 90 days or whatever. I want to place a deposit for 3 months on 22nd February at whatever the rate that you have now. Okay. Then get ready to answer what is the maturity date. If you have the access to your systems, I think so. Do a dummy and see what would be the maturity date, what would be the interest and interest.
So what was the amount of the deposit?
Say, to make it easy, say 100,000.
We have to find out the maturity date and the interest rate, no?
Interest amount based on your interest rate. What would be the interest amount that you got? You will get on the maturity date.
Okay.
Okay. So be ready with it. I'm not sure when I'm going to ask the answers, but I'll ask when time comes. I'll ask. So remember, 22nd is the placement date and for 3 months. So you note down that and note down whatever the interest rate that you apply. Then come up with the maturity date and the interest component. Okay.
Okay, sir.
That's a sort of homework.
Okay, sir.
Yeah.
Okay. Okay, then shall we stop it? Stop for today.
Okay, thank you.
Okay, sir. Thank you, sir.
Thank you very much. We'll
Thank
try
you, sir.
to sort out all the technical matters that we face tomorrow. Sorry, today, before the next classes. But still, frankly, still we are adding little by little into the online classes. Last year also we had, but just the presentation and the discussions, no videos or nothing. Now only we are introducing these things. So give us some time to get the experience and solve this problem. Okay, then. Thank
Is
you
there
very
any
much.
evening session today? Any
No.
other session?
No.
All right. Okay.
Sunday 8:30 to 12:30. That's the time period. Yes. Be ready by 8:30.